Hi everyone. Hey, it's Michael, your fair instructor. Um, and the reason you're hearing from me this way right now is the when we did our class last week, we forgot, or I forgot, to give you the quiz that we always have at the end of the class. So um, I want to make sure you got it because there's a couple of important, both questions that are in it address a couple of very important points. Now, you know that when we on Saturday evening when we do our webcasts, I normally don't have my image up there because it it makes it requires a much broader bandwidth and is much more easily disrupted. So, by just various things that happen on the internet. So that's why I don't normally do that. But I thought maybe you'd forgotten what I look like, so that's why I put it here. But now that you have seen that, we're going to get me off of there and go right to the questions. Okay, the first question, and by the way, the quiz is about the private non-for-profits. The first question addresses how we value securities that the private non-for-profit owns, stocks and bonds, at year end. And the answer is that we show them at fair value. Let's look at this question. RST Charities received equity securities valued at $100,000 as an unrestricted gift. Well, it's a good gift. During the year, RST received $5,000 in dividends from these securities. At year end, the securities had a fair value of $110,000. By what amount did these transactions increase RST's net assets? Well, the answer is, assuming that they continue to have the assets, which, and by that I mean they have not spent the $5,000 dividends, then the answer is $115,000. That's the fair value of these assets at the end of the year. The $5,000, of course, is $5,000, and the securities went up in value by $10,000 from when they were given to the private non-for-profit. But however much they went up or down is really not so critical. We show them at whatever their fair value is at the end of the year. Now, let's say that they had gotten these securities in the prior year, and they were $110,000 then, right? Let's say they got them at the end of the prior year. So at the end of the prior year, they would have shown them at $110,000. This year, of course, the securities would be shown at $110,000. Excuse me. At the end of the prior year, they would have been shown as $100,000, and at the end of the current year, they'd be shown at $110,000. So we would have increased income on the income statement, which of course is not called the income statement; it's called the statement of activities, by $10,000, and then we would have also increased the value, the assets on the balance sheet. So we mark to market. We either write them up or write them down if they've gone up or gone down. And this is true for unrealized or realized gains. Okay? So that's a kind of a unique treatment there. Unrealized or realized gains on securities held by private non-for-profits. Those unrealized and realized gains go to the statement of activities, and the assets are shown at their fair value on the balance sheet. Okay, that's something that's commonly asked on the exam, and it's a good thing to remember. Now, the second question relates to how we're staying in the realm of the balance sheet, and it's which of course is called really not the balance sheet, is it? It's called the statement of financial position. They're asking in the second question about the net assets part of the statement of financial position, which is the private non-for-profit's equivalent of shareholders' equity. Now, the main distinction that we make down there is we show assets that are restricted and assets that are unrestricted. and then a total. A lot of the assets of the private non-for-profit will have some sort of restriction, and that restriction came from the donor that gave them those assets, right? Let's say, here's some money, but you can only spend it in a certain way, or maybe you can't spend it at all, but you can only spend the earnings that come from those assets. That's a restriction. So we break it into restricted and unrestricted. Therefore, the correct answer here of how Founders Library should show net assets down in the net assets section is net assets with donor restriction, net assets without donor restriction, and total net assets. I'd like to make a quick comment on item B. In the past, up until a couple of years ago, you would have had three categories: unrestricted, temporarily restricted, and permanently restricted. But I guess they decided that was too confusing to readers of the financial statements, so now there's just two categories that are shown on the balance sheet. Donor assets without restrictions and assets with restrictions, which is, again, why the correct answer there is D. A donor, by the way, doesn't have to be a person. A donor could be another level. It could be a company that donated the money. It could be even a government that donated the money. So just don't think of a donor as strictly a person. It's whomever the money came from. If that money was given to the private non-for-profit with a restriction, then it would be listed as part of donor restricted assets. Okay? All right. Let me know if you have any questions. Thank you for being a part of our program, and I wish you happy studies. We'll see you in a few days online.